Now get a reader on all of the day's currency plays and economic outlook. Clifford Bennett from ACY Securities joins us now live. Clifford, great to have you on. Look, can it maintain those gains, do you think, if we hear that the RBA make any decision either way?
Good morning, Cara. Well, I don't think it's going to hang on to these gains for very much longer. It could have another little bit of a burst to the upside, the Australian dollar, on some sort of news out of the RBA, but the RBA is unlikely to sort of gather any sort of hawkishness given the downturn in the Australian economy at the moment. We are still forecasting Q3, Q4 to be negative numbers. That's a recession. We're seeing some of the other major institutions begin to follow that forecast. The Australian dollar had a major run to the upside, really on the back of a weakening US dollar, and there does seem to be a little bit of a sign there with the euro and the sterling. The US dollar might be finding some sort of base at current levels, but the big factor for the Australian dollar was, of course, that record trade surplus. But what very few people have sort of managed to point out is that the huge record trade surplus was less about exports and more about imports being weak. Exports are about 5%, only about 5% higher than they were in 2019, even with that record number. Whereas imports are around 10% below where they were pre-COVID. So really that record trade surplus number that everyone got excited about the Australian dollar for was more about weak imports. That's partially weak economic activity in Australia, but it's also, of course, supply chain disruption to the shipping situation that still prevails over much of the world.
Clifford, where do you sit in the inflation camp? We've had the word stagflation bandied around on a global scale, but if you look at some of the recent numbers out this morning when it comes to ANZ Roy Morgan's consumer confidence, expectations when it comes to inflation are on 3-week highs. So, I mean, where do we go from here?
Well, I think the general public's way ahead of the economic community in Australia on this. I don't know what's going on with some of the other economists in Australia. We're facing a tsunami of inflation, as I said on your program, I think 2 months ago, maybe more, and twin tsunami the world is facing, twin tsunami of delta inflation. When I came out with that call, everyone thought I was a little bit out there with the fairies, but I'm used to that. But both have materialized. Both are very real. We're seeing economic data in the US fall off a cliff and everyone's acting like nothing's going wrong. We're seeing the situation in Australia very adverse, in fact, in terms of economic activity, while at the same time, inflation is going up. And you know why inflation's going up? It's because your cup of coffee costs a lot more in the morning than it used to. And that's because every business around the world, from the corner store to the global corporation, has gone, oh, we've got an excuse to raise prices, and we can do it without losing market share at the moment. Globalization was all about global competitiveness, competitive price pressures. That's why we had low inflation, even though we had money printing in 09 and 10 and 11. I forecast that at the time that we wouldn't have inflation then. I'm now forecasting we'll have sustained high inflation when other people aren't. And that's because those record earnings in the US, they are price gouging earnings. That's where the inflation is coming from, and it's the same in Australia. Record earnings are coming from price gouging, a little bit of JobKeeper help as well, but that's gone now. But the ability to raise prices without losing market share, I call it freedom of pricing, is what is driving inflation. That's going to persist, and it coexists, unfortunately, with Delta. So you're getting both economic suppression and inflation from the same core root or excuse. Sometimes it's an actual true reason for raising prices, supply chain disruption, but other times it's just an excuse for price gouging. So inflation's going to remain high. The economy is going to remain weak. People are way too enthusiastic about this idea of opening up to freedom and calling it Freedom Day for New South Wales. It will be nothing of the sort. It's going to be a long, gradual, hard recovery for the Australian economy this time, entirely different to the previous occasion. And there's a whole lot of reasons for that. So yes, stagflation for the world, and particularly for Australia, is entrenched. And the RBA meeting today, they should never have had a bond buying program. We can tell by the economic data, and I said that at the time. They can't raise rates, though. They can't taper too quickly or raise rates. because of the ongoing threat of Delta. So they're between a rock and a hard place. It means they fall further behind the inflation curve, which means we are facing an out of control inflation run over the next 6 to 18 months, which will do an incredible amount of damage to the economy long term. We are not in any kind of nirvana economic environment at the moment, as everyone wants to believe. This is a very difficult time, and stocks are very overheated relative to the on-the-ground economic realities.
So Clifford, then what does that mean for the commodities market? I know you're cool on gold, I know you're long gold, but a broader sense of what we're seeing, maybe some of the local plays like iron ore.
Yes, I think we've seen the peaks in most practical, call them practical commodities. But for gold, it is going to again become a safe haven trade as Delta and other variants continue to circulate around the world. It's one of the reasons US stocks were strong. People in large nations around the world that are relatively wealthy but heavily hit by COVID were actually buying US stocks as a hedge, and they're switching that trade idea now to gold. Gold's going to be volatile. Black gold is going to be volatile, but gold is going to go up, black gold is going to go down. They will whip around, but oil will be weak, as will other commodity prices, because the global economy will continue to underperform. It will be below trend. And gold will go up as a hedge, and it has all sorts of practical and industrial purposes as well, but it will also increasingly be a hedge against the ongoing disarray over Delta and any other variant that comes along. So gold is an independent story of commodities at the moment, and gold will take a big leap higher should the US dollar find a base here and begin to move higher as well, because that will suggest that people are still scared of what's going on in their own nations and moving money towards the US, and at the same time they'll move money towards gold. So it's a little bit different to the usual state of affairs. Commodities overall, iron ore exports in volume and in price are very toppy here. All the good news you're ever going to hear for the likes of Fortescue and BHP, etc., are probably rather well priced in now. They could still have significant bounces, but I think we might have seen their peak for a period of time. Just a cooling off period for 6 to 12 months before again having a bull market. But we are highlighting, and we've been right to do so, that Australian stocks are something you should keep an active eye on at the moment.
Clifford, it sounds pretty grim out there. I hope you have a good day though. Thanks for joining us.
Because we have these great hedging tools now available to us, and individual investors have a great advantage over institutions. We can think for ourselves, and we can think quickly, and we can make decisions quickly. It's a great advantage over the big institutions, and people should be making the most of that. Thank you very much.
Exactly, all about hedging. Great to chat. Thanks so much.